This is swing trading in a practice account. Every day before I start, I treat it like a real account, even though it's a practice account. The same principles apply because the same prices are being used in the same shares. Every day, before I start trading, I always look at the FTSE, FTSE in Google, and you see it, and it gives you a price, which would be either a red minus or a green plus, and you'll get a graph chart, and this is what the graph chart looked like yesterday, right? So I look at that chart, and then I look at the Dow Jones, because I trade on the New York Stock Exchange, tech stock, and this was what happened yesterday in the Dow Jones. But at the start of trading, you'll only see about a very, very little part of that, about a millimetre of that graph. That's the full 8 hours or whatever trading at the end of the day. So I look at that, so I know roughly if the market's opened up or down on the gap. These are my stocks that I've got, and they are currently all positions are negative. So they've all lost money. They've only got about 5 or 6 days to go. So yeah, but I don't mind that. And I lost the background noise. So these are my stocks, and they're all losing money, but I don't mind that because the account is balanced, and it's well balanced. So it's lost about 50. This is the same account that was at 290 odd grand. It's now 129. So it's lost about 160 grand. And I can afford in this account to lose another 50 grand. To go into about 80. I would close the positions if they went down below 80 grand equity. But I don't think that would be the case. And they close within 6 days anyway. These are still my options. So you've not seen one that's in green because it's all negative equity. And this is it. So this is what they are at the moment. People that day trade live on the screen. I don't day trade by charts. I day trade by numbers, like this. I can day trade on day trading. I can do swing trading. I can do long-term investment. I can do up and down the chart sequences on mountain view and candlestick and all that. You know, I can do all that. So I've got those options if I wanted to actually do that. But this is the current balance. So you'll see it's about 129 grand equity. It was 292 grand equity about a week and a half, 2 weeks ago. It's lost about 160 odd grand. But see, most people would panic there and actually start selling the stocks, but they wouldn't. You don't want to sell the stocks there because you're at the bottom end of a swing, which means you've probably got 2 days of the market. You've probably now got, to get this, oil was closed down about 5 times straight, 4 or 5 days on the straight. It's gone down in value, which doesn't always happen. I've got options that are only down to 1p, or is it north of they're low, but this is how there's enough equity in there for that to lose another 50 grand. This is what if you recognise this balance, you'll know there's this is not the ideal situation. The previous balance is perfect because it's got liquidity. So if the stocks go down, it doesn't matter. Whereas this balance here, you need the purple line to be 30. If that was a clock face, you have 12 at the top and 6 at the bottom, and 1 to the right of the 12. You need this to be, the purple line gap needs to be half of the screen. So at least half of the screen where the purple line is on the 1 o'clock. So you've got all half of the purple to carry on. That's where your balance should be, not like this at the moment, because that's where it busts the balance.